I am David Baker, CFO of Elemental Altus Royalties. We are a precious metal focused royalty company listed on the TSXV. We are focused on near-term producing gold and copper royalties.
Dave, good to see you. I know you're in Canada and just about to dash off to a conference, so we're going to get into this real quick. M&A abound out there, and you didn't want to be left behind. You're doing a bit of M&A yourself. Tell us about this new deal.
Yeah, absolutely. Really excited to announce some material acquisition for us. So $28 million all equity deal, and that really consolidates the royalties that we already have on Bonikro, Ballarat, SKM, and 21 other exploration and development royalties in Australia.
Right, and what's it actually bring to the bottom line? Because that's the important bit.
Yeah, absolutely. So we're starting paying us from Q4, so we'll get a small amount of revenue this year. We're estimating at consensus pricing $6 million next year, and then $5 million over the next 5 years, just on consensus pricing. Obviously, consensus is a fair bit lower than spot, so we've got full exposure to high gold price.
Right, and also, if you don't mind, can we get into the detail of, what's this cost you, and what's your expectation of that return of capital?
Yeah, absolutely. So it costs us $28 million in equity. We've got Alpha Stream, which is a large UAE natural resources fund. It's coming onto the register as a 15% shareholder, so very excited to have them on board and opportunities for co-investment with them. Going forward, and yeah, I think immediately accretive, certainly accretive on a NAV basis, and certainly material accretion on cash flow. This is going to bring 25% more revenue year on year to us.
These guys seem to have a high exposure to gold. Not bad in this environment.
Yeah, no, exactly. That's really always been the focus of the company, is gold. We do focus on the majority of things we look at are gold. I think we're seeing that with the significant increase in gold pricing this year. So that's been a worthwhile strategy.
Right. Okay. And can you tell us a little bit more about the assets themselves? I mean, in terms of jurisdictional risk, and maybe you changed your focus, or is it the same as?
Yeah. No, absolutely. So these are assets that we already have royalties on. So Alpha Stream, we're our joint venture partner that the Altus strategy team put together at the pre-merger in 2021. So the larger royalty in the portfolio is on Bonikro, and that's in Côte d'Ivoire, operated by Allied Gold. It's a large TSX listed company. Peter Moroney and the Amana team are operators there. And so we take our royalty there from 2.25% up to 4.5%. So previously, on average, Bonikro has been paying us about $1 million a quarter. Now they start paying us $2 million a quarter. So it becomes very quickly our largest royalty.
Okay, so Bonikro, but all the assets you're already in. So I thought there might be some new assets coming in. This is just basically
so it's
increasing your position,
doubling the portfolio that we had there. So these are assets we know extremely well. I'd say the second largest asset in the portfolio is Ballarat. So that is the old Ballarat mine in Victoria. That has gone through an administration process. It's come out the other side with a very strong management team, very well funded, and that was one of the reasons as well that gave us confidence to go into this transaction with a new management team at Ballarat that should be again another material contributor to revenue immediately.
Right. Okay. Sorry, I should have picked that up when you said that earlier. I thought there were some new assets. Right. With regards to, we're looking at the market more broadly. There's a lot of M&A going on out there. There's a lot of consolidation, mergers of equals, etc. Meaning that maybe some of the companies which were looking for alternative financing over the past few years have gone away, and maybe there's an expectation that the cash being produced by these gold companies, whilst you will be a beneficiary with the assets in your portfolio, will be used to kind of pick up or fund, or in some way, I guess, steal your lunch, right? How do you see it going forward for you guys? Are you going to have to do more cleaning up of the kind of royalty space as a means of growth?
Yeah, we've always been very supportive of consolidation in the space, and look, it continues. I mean, we've just seen in the last couple of months, the Trident guys acquired by Deterra. So I think that's now over 10 acquisitions or mergers or combinations in the sub-billion dollar royalty space. We think that does need to continue. It should be a very high margin, low overhead business. So there's obvious synergies from combining royalty companies. But then also, going out there and being that sort of provider of finance in tough capital markets. I think we're on the cusp of being able to do that. If we are talking to over $30 million of revenue next year, which should translate into material free cash flow, then we are looking to deploy that. Obviously, it's got to be the right operator, the right jurisdiction, the right stage, and that is a more competitive process, versus capital markets or debt or other royalty and streaming companies. But yeah, something we're looking at. But that's still the primary business is going out and acquiring non-core royalties.
Right. Okay. And again, looking into the market and seeing, how the producers obviously in Iran, lots of I guess free cash for them, like new monies at nearly $2,700 gold. Developers to say, look, with an eye on, perhaps some of those guys dropping down and helping them out. Explorers, it remains a tough market. There's still that massive disconnect between gold or precious metal prices and equities. Do you expect that to change? I mean, is there any way that you can take advantage of that?
Yeah, it's a good question. I think certainly the sentiment I've seen is that maybe people are starting to pay a bit more attention, especially with the material increase in gold price. I think still certainly there's not as much confidence around the developers and the capital required and the permitting process to get some of these projects online, which is probably why you've seen the disconnect between the producers sort of terms and the explorer developers. I think certainly the ability for us at the right point in the cycle is to deploy capital into the right opportunities, and so that means that I think we do have to be very, very strong on our focus in terms of the right commodity mix, the right asset, but then also importantly having that capital available to deploy at that right point in the cycle when royalty exchanges are available. So I think that's why this transaction I think is really important to us, because it just materially improves our free cash flow, obviously our build up of cash, but then our ability to use our facility and leverage as well to deploy non-dilutive capital at the right time.
Right, and obviously before doing this transaction, you've looked at and spoken to lots of other players in the market, and I refer to my phrase of cleaning up in the space. I mean, that's been a conversation been ongoing for the last 5 years. We've talked about it before many times, talked about it with Fred as well. Are there good opportunities left in the royalty space in terms of these smaller cash restricted companies themselves, with maybe pre-revenue or near-term revenue, however you want to phrase it? Are there some good assets still to be looked at, to be had, conversations that you are having?
Absolutely. So I'd say certainly in terms of acquiring existing royalties, which is sort of our bread and butter, the fact that the juniors have lagged does make it a lot easier. For example, we bought a small but non-core, but I think fairly accretive tungsten royalty from a mining junior earlier in the year, and I don't think they would ordinarily have been sellers of that royalty. But given the share price performance, the desire to have to fund the next year's exploration program without having to dilute that brought that royalty onto the table that we were able to execute on that. I think it's a different point in the cycle for us in terms of actually then going and directly funding these companies to take them to the next stage. But I think if the pain in the capital markets continues, at that point probably is too far away.
Right. Okay. And so, what would you say to your shareholders? Is it a case of you've got to deploy your capital efficiently, to expect the best kind of returns, rather than feel that you must do transactions to get noticed, to get revalued? Is it okay? Is it a wait and is it a cat and mouse game here?
Yeah, I think that's a really good point. Like we certainly, with the portfolio we have now, I mean, talking to over $30 million of revenue next year, we don't need to go out and overpay for deals. We don't need to go out and chase transactions just for the sake of doing them. We can afford to be patient. Now, obviously, we're not paid to sit still. We are out there looking at hundreds of deals every year. Something lands on our desk nearly every day. But it does mean that we can afford to be selective. It means that we can stick to the investment thesis and strategy, into targeting copper and gold in the right jurisdiction.
Right, and in terms of boosting your own or bolstering your own balance sheet, you've done it. You have looked at your own portfolio obviously and said this all works for us, or will there be some again cleaning up to do there?
No, I think there's definitely since the monetization of the exploration business that we gained in the merger with Altus, that is now complete. So there is a little bit of under the hood, a bit of tinkering and just tidying up. But no, now we're now massively simplified corporate structure, and that will just directly impact much lower G&A going forward. And then behind the scenes, the stuff that you don't see, just much less admin going forward. So that does allow us just to use much more of all our time going into buying royalties, which is what we want to do.
Okay, and in terms of that kind of tinkering, I think you've alluded, obviously, like potential revenues going forward are significant that you don't need to rush into anything. But at the same time, what's your ability to actually go and renegotiate or help some of these companies and just be that little bit firmer with what your expectations might be?
Yeah, it's good actually. We tend to have a phenomenal relationship with all our operators, and I think that's certainly the opportunity with some of these assets as well. I don't think it's a secret that a few mining companies probably didn't raise as much money as they like. They have had to go into the market. They have had to go into larger streams, and so we can leverage the relationship we have. We have all the data in front of us. It does put us in pole position maybe to go out and talk to some of our operators about incremental royalties or additional investment, for sure. But I think as well, we're really focused on large accretive deals that are adding more cornerstone assets to the portfolio, because ultimately, that's really where we get the ultimate value from.
Right, and with regards to money's money, a dollar is a dollar. How you structure it, is really a factor of what type of returns you want, what kind of securities you want. Are you going to stick with the royalty model, or as you start to accumulate cash, will you be looking at other products that you can put into market?
Yeah, definitely. I think at some point you do have to move into the streaming model and be that provider of finance, just because typically royalties do tend to cap out at a size. There are a few very, very large royalties. They do exist, of course, but there are just not that many of them, and obviously they are very sought after and thus very competitive in the process. And we tend to see the majors coming in, the big guys coming in to pay quite a lot of money for these long life uncapped royalties. So you do then have to become that provider of finance and into the streaming model. We have some experience with that already. But I think we're probably getting towards the cusp of having enough revenue and recurring revenue on the books that would allow us to use our facility to underwrite some streaming transactions, obviously at the right point in the cycle with the right operator and the right commodity mix.
Right, okay. And obviously you're attracting a lot more institutional interest, which is obviously good news for you guys, maybe even some of the indices as well. How do you value yourselves? You're sitting at market cap 230. You've done these sort of share structure type deals, and there's sort of expectation that revenues kind of going to move through the phases. 30 plus million a year. How should we be valuing you? How do you feel you should be valued? Because like all company execs, you're going to tell me you're undervalued. So how do I value you?
Yeah, that's a really good question. So I think street consensus on NAV is just shy of 1 times, which is on consensus gold and some conservative production assumptions on our assets, and that probably feels about right. So for producing royalty company, generally I would have expected producing royalty companies to trade premiums to NAV because you use quite conservative assumptions and there's quite a lot of upside in the portfolio. But we have seen quite a bit of margin compression there. I think what I talk to, so pro forma, after this deal is done in US dollars, let's say we're 210 US market cap, for example, and we're looking at $30+ million of revenue next year using very high level assumptions. If that translates to $20 million of recurring free cash flow, then you've got a precious metal royalty company trading at 10% free cash flow yield, which I feel like is a fair way off historical norms. And clearly is like that either the market doesn't believe the revenue's coming, and I think that's clearly not possible, or our share price is undervalued. It's one or the other. So at some point, I think we've got to demonstrate that we can generate that cash. We've got to show that we can redeploy that cash into accretive deals, potentially contemplate a dividend or a share buyback as well, if we feel like the shares are undervalued. But I think at the moment, just on a cash multiple basis, on an NAV basis, we are materially undervalued compared to historical multiples. And what we need to show is that we are going to generate that cash to demonstrate that.
Okay. And just, I guess, finally, just sort of sticking on the same point, obviously, how should we view you? Because if we look at some of your peers, and you mentioned some of them in your presentation, the likes of Vox and Gold Royalty and Metallic, Amex, etc., I think people understand what each of those is about. I mean, how would you describe yourself? How do you position yourself, and more importantly, differentiate yourself from them?
Yeah, it's a great question. I think we've done it the hard way. It's quite easy to go out there and buy a lot of long dated royalties, have a lot of conceptual NAV, wait for good news to come in, and often it does if you've got a good operator in a good location. But that just takes time. We started with a one cash flowing royalty. We're now up to 11, and continuing to grow, and really push that revenue. So then we are able to then use that cash and redeploy that cash into deals without diluting our shareholders further. I think as well what differentiates us between most of the companies in the junior royalty space is really those core underlying assets. So that nearly half our revenue previous deal came from Karlawinda and Caserones. So Karlawinda, very large Australian gold mine, open pit, Capricorn Metals, a phenomenal operator, paying us $4 or $5 million a year for the next 12 or 13 years. Plus they're talking about an 50% expansion study, which could get us a couple of $1 million. And that's already in the portfolio. We don't have to do anything for that. Caserones, very large, long life copper mine, 125,000 tons of copper a year equivalent, operated by the Lundin family, who are exploring and growing and trying to consolidate the region. So whilst you can have a lot of little assets and you can be quite, the point is diversification, that we're also underpinned by two exceptionally high quality, long life assets that really do underpin our portfolio. I think that's a real differentiating factor, and I think what most royalty companies would dream of having in their portfolio.
Okay, well, look, appreciate you making time today. I know you're dashing off to this conference and then jumping on a plane tonight. So well done on the transaction. Hopefully more to come. We'll speak soon.
Thanks, Matt.